It's Wednesday, April 19th. You're watching the Daily Market Comment at xm.com by Mario Sotokiriakos. I'm Christina Marujos. The British pound was in a jolly mood on Wednesday after the nation's latest inflation report came in hotter than expected, cementing investor bets that the Bank of England will keep raising interest rates to put the inflation genie back in the bottle. Consumer inflation in the United Kingdom clocked in at 10.1% in March, whereas the core rate remained unchanged at 6.2%. Defying expectations for a slowdown. Market participants responded by fully pricing in another quarter-point rate increase at the Bank of England's next meeting in May. This was music to the ears of the British pound, which stormed higher to record some solid gains, especially against the Japanese yen. Moving forward, however, it is tough to be optimistic on sterling. Cable has returned to its old habits of tracking stock markets, having an 86% correlation with the S&P 500 over the past month. Hence, any sell-off in equities could be quite damaging. In the broader FX complex, the wounded US dollar has managed to regain some footing with some help from a rethink around the Fed's interest rate path. Markets currently assign an 85% probability for the Fed to raise rates in May. However, it's quite concerning that the dollar could not recover properly and has simply managed to stabilize after this Fed repricing. The dollar's inability to rally suggests the overarching narrative hasn't changed. Investors still anticipate heavy rate cuts, only the timing has been moved forward into next year. While the recent spike in U.S. yields hasn't done much to boost the dollar, it has inflicted damage on the Japanese yen. Pairs such as euro yen and sterling yen have gone berserk this past month as recession fears subsided and expectations about imminent tightening by the Bank of Japan faded. Over in the equity arena, there's still a sense of exuberance in the air. Any dips are shallow and get bought quickly. Valuations have reached extreme levels, while the VIX fear gauge has been crushed as investors remain reluctant to buy downside protection. This is a market that doesn't expect any shocks. However, in reality, it's probably the tsunami of liquidity that was unleashed after the banking episode that did the heavy lifting. As for today, the earnings show will continue with Tesla releasing its results after Wall Street's closing bell. Thank you for watching the Daily Market Comment here at xm.com.